The monetary system is collapsing, and Japan might just be our crystal ball showing us what's about to spread to the rest of the world. The system is cracking as we speak, but this time, it might not take a whole decade for everything to shift. If you've been holding Bitcoin for a while now, you know that this cycle has been a complete anomaly. All previous models have been broken, and time seems to be but a construct in this strange simulation where everything happens in a sequence of events we never imagined. Not only are Japan's high yields a signal for what's to come, a congressman just announced that he's buying Bitcoin. Morgan Stanley is selling $100 million in Bitcoin ETFs to their ultra-wealthy clients. Citi says the liquidity crunch is over. It's all so unexplainable when you relate it to the price, so what's really going on? Either they know something we don't, or they're starting to realize what we've known all along and need us to pump their bags.
Well, it looks like a debt bomb just went off in Japan. Population with 126 million. Public debt to GDP ratio of 295%. Their bond yields are surging at levels not seen since the dot-com and the GFC. Is there any surprise that they're talking about getting ready for stimulus? Not at all. Is this the first domino to drop out of many to come? We're going to find out.
Everyone's heard the saying, Japan is living 10 years in the future, but I had no idea that that also included the economy. Japan's high-yield bonds started breaking the internet this week, and like any normie, I didn't really get why it was so relevant. But then, Opti actually let me know Japan's economy is the model for the future of the US economy. And that's when I locked in. I felt like That's So Raven staring straight into America's future. And unfortunately, it's not looking very bright unless you're holding the hardest asset in the world, because here's the thing. Japan already lived through the structural problems the US is now accelerating into. And remember when I said that time was but a construct? Well, when people say Japan is a decade ahead, the future might actually be closer than it appears. Here are the receipts, and pay some close attention to the dates because this is more accurate than astrology. Japan's bubble burst in 1991. About 10 years later, the US had its own massive crash, the dot-com bubble in 2001. Different triggers, same outcome, collapsing markets, emergency rate cuts, and the start of America's long slide into permanent intervention. Japan launched quantitative easing, also known as the money printer, in 2001. Fun fact, they literally invented it. Then the US copied QE in 2008. When Japan hit zero interest rates in 1999, the US hit zero in 2008 and again in 2020. Japan crossed 100% debt to GDP in 2000. The US crossed that same line in 2013 and blew past 120% after 2020. And finally, what is to me the most interesting economic correlation here, Japan's population started shrinking in 2008. Then the US saw its first native-born population decline in 2020. And you would think people would be having more babies in 2020, but no, that was the decline. Japan experienced all of this first, and now the US may be moving through it way faster. So when Japan suddenly loses control of the very long-term yields it's kept pinned down for decades, that's not a Japan problem. That's a preview of what happens when a fiat system hits its structural limits. And if they couldn't hold the line with every advantage, the US, with higher deficits, political chaos, and global reserve burden, is in an even tighter spot. Japan was the model, but it turns out they're actually the warning sign.
You're seeing in Japan, 10-year yields in Japan are at the highest levels in, a long time.
Long time.
And the yen is weakening markedly, which is when your yields are rising and your currency's still weakening, that's like emerging market type of action, which is very important because if for the last 5+ years, if you want to know where the 10-year treasury yield is going to be in anywhere from a few weeks to a month or two, just look at the direction of travel of the 10-year JGB. And the reason that is those are the two biggest carry trades, funding currencies in the world going back 30 years. After 89, the yen became a carry trade. And then after Bernanke in 2008, the dollar became a carry trade. And we saw in summer 2024 that anytime the yen gets too strong, the carry trade blows up. And anytime the yen gets too weak, dollar gets too strong, the dollar carry trade blows up. So you're sort of between Scylla and Charybdis on that front, with Scylla starting to get a little mouthy in terms of the Japanese 10-year bond yields.
And here's where the whole thing gets even crazier, because it's not just that the US repeated Japan's past, it's that the US is repeating what Japan did a decade ago. Right now. Remember Abenomics? Japan went all in on massive government spending. Well, we've got the big beautiful bill, ramping spending into overdrive. Japan forced interest rates down. We've already cut this year twice, September and October. And they're already whispering about a December cut. Japan flooded its system with liquidity. And what did Citi tell us last week? The liquidity crunch is over.
In your note, Dirk, correct me if I have this wrong, we're trying to find explanations for what's going on with Bitcoin. Were you pinning that on tightening liquidity?
That is one of the explanations. There are a couple of things going on in Bitcoin that are interesting. First, there was a flash crash in early October. And that, for Bitcoin itself, it was a 14% move down over 2 days. Maybe not that drastic, but some of the altcoins really got sold much, much harder. And after this flash crash, we saw that the flows into the Bitcoin ETFs and so forth really changed. So the flows really never recovered, and so retail was apparently somewhat shell-shocked by that day, and we saw outflows. The other thing that happened is that I think a lot of the institutional investors trade Bitcoin with a bit of a trend-following mindset, and so we broke some of the moving averages that they tend to look at, and that is also reducing the source of demand. But the third point is what you were mentioning, and that is that the liquidity which we measure by bank reserves on the Fed balance sheet, dropped by a bit more than 500 billion. And that happened because the Treasury increased the Treasury General account at the Fed by selling a lot of T-bills. And there were two reasons for that. One is why this TGA account was so high. One is that that during the government shutdown, the Treasury didn't spend as much, so that account rose mechanically on the back of that. But secondly, they did sell more T-bills than is typical. And so we are thinking going forward, the liquidity squeeze, so that explanation for the Bitcoin weakness should actually get much better, because we expect TGA to at the very least flatten out and probably decline, meaning bank reserves and liquidity should improve between now and the end, partly because of the reopening and partly because the Treasury sold so many T-bills already.
Yeah. Because we're opening the monetary floodgates too. Japan weakened the yen to stimulate growth. Meanwhile, the dollar softening exactly as the Fed shifts from strong currency to, please, dear God, don't break the credit markets. Look at the US today. ETF dominates flows. The Fed backstops everything, and Bitcoin ETFs are soaking up every retail dollar they can find. So when people say Japan is about 10 years ahead, the future might be closer than it appears, because everything Japan experimented with 10 years ago, we're living through today. What might be different now, however, is that those who lived through every single one of those cycles, the boomers in suits, they see it too.
We're going into a lower rate, high fiscal stimulus environment with high fiscal deficits, and people don't think Bitcoin's going to go up. Like, yeah, it's scary and annoying to some people with a short attention span that Bitcoin has not behaved exactly as people expected at the bottom of the cycle, but everything's changed with the ETF and with the treasury companies, right? And the current liquidity backdrop and the macro. So we just are in an elongated cycle. So we may still see parabolic price movement. This cycle, it just may not happen until 3, 4, 5, 6 months from now, or even this time next year. I see a scenario where this bull market, if you overlay it with the AI CapEx spend cycle, which I'm extremely bullish on, there's a lot of every 6 months they turn bearish on this and then they bounce right back because AI is a 20-year theme. It's sort of like being bearish on the internet. There were people who were bearish on the internet for the last 25 years, but they all made less money than people who were long. Long Bitcoin, long AI, easiest trades of your lifetime. You just hold them in large size for a decade. And we're at year 2 or 3 of a major uptick in AI CapEx. You're not going to see a huge recession with the biggest companies, the largest companies in human history with the highest cash flow, pouring money into AI. And remember, AI overlaps with Bitcoin, both in terms of agents, AI agents wanting to use some sort of algorithmic asset, and also in terms of the energy layer, AI and Bitcoin are competing for power at the data center level. So if AI can continue to rip, and I think it will, then Bitcoin's going to struggle to go down for very long. It can go down for a few more weeks or something, but it's probably not going to stay down that long.
So once you see the macro rhyming, Japan then, the US now, the next thing you notice is how the insiders are behaving. A sitting congressman is publicly stacking Bitcoin. Morgan Stanley is moving over $100 million worth of their Bitcoin ETFs to ultra-wealthy clients. Citi is signaling the end of the liquidity crunch. Those aren't TikTok traders, those aren't Reddit degenerates, those are people closest to the plumbing. The ones that see the cracks before retail even notices the noise. Some even take notes from the greatest trader of all time, my girl, Nancy. And they only move early when a shift is coming or they need someone to pump their bags on the next leg. And the truth is, both can be true at the same time.
This thing is, you can't kill it.
Ooh. Can't.
And the late Charlie Munger, who was so brilliant on so many things, was blind to this. Now you can say, wait a second, maybe it's all going to come
Jamie
unravel.
Dimon has not spared any negative words.
No, but look, I mean, it's a reality and it's a technological marvel, and I think people have to start recognizing that it's here to stay. The SEC's been against it almost the whole time.
Yeah.
Now, that doesn't mean that every one of these is here to stay, but I do think that this is a remarkable comeback that was unexpected, except for all the bulls who turned out to be right.
The same institutions making the quiet moves are also the ones getting the loudest on CNBC.
I look at it as a vehicle in which you're expressing your financial acumen in something that you're more frightened of the world, you're more frightened of your existence. And I believe there's a great industrial use for it. And I think a lot of people are missing that.
I couldn't agree more. I changed my mind about it when you did. You admitted my thinking. It was like, you don't believe it, so I can't believe it. I want to thank Larry Fink for the message of optimism.
Thanks.
And also for a great quarter. Larry Fink is the co-founder, chairman, and CEO of BlackRock, I think the most important investment company in the world.
Every Bitcoiner gets the ick when Wall Street starts talking bullish.
How do you do, fellow kids?
What? I swear, the reverse Kramer effect used to be funny, but now I'm tired.
Own Bitcoin, that's a winner. And that, ladies and gentlemen, is the conclusion of the Lightning Round.
It honestly feels like a curse. The moment the suits start praising Bitcoin publicly, the price dumps. It's like when you were a teenager and your parents suddenly thought something you were doing was cool, and then you immediately wanted to stop doing that thing. Well, I'm starting to feel that way here, especially because these people used to call us the degenerate lowlives of the financial world.
I've always been deeply opposed to crypto, Bitcoin, etc. You pointed out the only true use case for it is criminals, drug traffickers, anti-money laundering, tax avoidance, and that is a use case because it is somewhat anonymous, not fully, and because you can move money instantaneously, and because it doesn't go through, as you mentioned, all these systems have been built up over many years, know your customer, sanctions, OFAC, they can bypass all of that. If I was the governments, I'd close it down.
Okay. But here's the uncomfortable truth. Bitcoin is also for enemies. And if it's going to become a global monetary standard, it has to be big enough for people that we don't trust. That's the tension. We obviously know, and they probably know, that you can't build a monetary revolution on ETFs alone. ETFs don't change the world or build the future of finance as we know it. Adoption does. They need retail to adopt the asset, even if it's their BS paper Bitcoin, so that their positions can actually appreciate. So when they talk big on TV, it's not about orange pilling you out of love. It's about building liquidity, your liquidity, to be specific. But here's the other part of that ties back to Japan. These boomers, these institutions, they've lived through every single warning sign Japan showed us. They lived the dot-com crash. They lived the 2008 crisis. They lived QE. They lived debt explosion. They lived demographic decline. They felt those shocks in real time. Some of these people don't even have grandchildren at this point. Just saying. So maybe this time it's not just about pumping their bags? Maybe they're finally seeing the same future Japan has been screaming about, and they're trying to make sure that the system somehow survives the next decade. Doubt it, but that's why you don't listen to the hype. You watch the flows, and the flows are moving in, even when the price is chopping sideways. And if the boomers are preparing for the next decade, then stacking straight from the source might be the smartest play of all. Would you mine Bitcoin if it were as easy as buying it? Then you should check out Sazmining. It's not hosted mining, it's mining as a service that actually puts Bitcoiners first. You can own a state-of-the-art mining rig, plug into affordable carbon-free energy, and stack Bitcoin just like Satoshi. No middlemen, no markups, and no worries. Saz doesn't tack on extra fees when you sign up, and unlike other companies, there are no rig upcharges or inflated power rates. Their entire business model is based on a clean and simple revenue share. They only earn Bitcoin if you are too. A total alignment of incentives and 100% Bitcoiner values. While some claim simplicity, Sazmining proves it. Let's just say that if you need a compass to find your miners, you're not in the right place. This is how Bitcoin mining should have always been done. Visit sazmining.com or scan the QR code to learn more and start hashing. Now, let's get back to the show.
If you go back to 2018 in the Bitcoin community, if you said you said Larry Fink, they would say, oh, Larry Fink doesn't like us. And in the year 2024, Larry Fink goes on television and speaks to leaders in the world and says Bitcoin is a store of value. It protects the sovereignty of the individual. It allows you to achieve your hopes. It is hope. Larry Fink has said Bitcoin is hope. Now, what does that say to me? It says, we don't have enemies. What we have are people that need Bitcoin that don't yet know why they should be our friend. When someone goes on television and they're asked, what do you think about Bitcoin? And they get poked and they're a little bit irritated, they got to ask the question. They're not an enemy of Bitcoin, they're just not prepared for the question. And in fact, over time, the journalist will do the poking because they know the most important thing in the world today is Bitcoin. And you're going to have a group of people that understand it, that will say it's the future. And you'll have a group of people that don't understand it and they will not have embraced it. But at the end of the day, with time, with education, we're going to see more and more people join the network and they're going to participate.
Here's the twist. Even if you don't trust the institutions, and honestly, why would you? I don't. They're not wrong about fiat. They know that the system is dying. They know debt spirals don't reverse. They know bond markets eventually revolt. They know you can't print prosperity, only delay the collapse. They're not warning you, they're positioning ahead of you. You want monetary freedom, they want control over the next monetary standard. And the only way to front run them, or as Nico likes to say, front ran, is to own the asset that they can't manipulate, can't print, can't freeze, and can't rehypothecate. Real Bitcoin. Self-custodied Bitcoin. The kind they don't control and will never control. And if you're in full control of your Bitcoin, you need Bitcoin-backed services that you can trust. That's why we roll with Ledn, the global leader in Bitcoin-backed lending. Ledn has issued over $9 billion in loans since 2018 and a perfect record of protecting client assets. Why is a Ledn loan different? Collateral is not lent out to generate interest. No credit checks, funds in 24 hours, no monthly payments, repay whenever you want. Zero penalties. And their proof of reserves, verified every 6 months, keeps them transparent. Ledn lets you unlock liquidity without selling. Sign up through Simply Bitcoin for 25 basis points off your first loan. Scan the QR code or click the link in the show notes below to get your discount today. Now, let's wrap up the show. So the price is choppy, narratives are all over the place, but the signals are screaming. Japan just flashed a warning. The US is next in line. Institutions are repositioning, fiat cracks are widening, and you only get one chance to exit the system before it tries to exit you. Bitcoiners didn't break the system, we just built the way out, and the exit is still open. For now. Comment below if you think the institutions are front-running the collapse or setting up retail. Are you stacking real Bitcoin or just watching them buy it? If you enjoyed the show, please give it a like and consider subscribing to our channel. Turn on the notification bell for the most fire Bitcoin-only content. And as always, stack, slay, and stay bullish, baby.